Hey guys, Taylor with GammaEdge here, coming at you with a post-market update for March 18, 2025. All the excitement on the day today came right off the open where it gapped down, took out prior day lows, touched 5,600, and rest of the day was just chop fest. From a momentum point of view, going through our pre-market routine real quick, here's our market trend model. In the short term, no doubt, short-term bullish, had a 2-day kind of momentum impulse higher. So the thought from this point of view only was kind of cautiously optimistic, cautiously bullish here. So frankly, after the price action today, really no harm, no foul done, just simply a kind of sideways consolidation day. So tomorrow's gonna be a critical day. Reason being is we need to see that continuation higher again, as we talked in the post-market video yesterday. If we start to see a waterfall lower, then that would be concerning. But the signature that we call the railroad tracks, which is a short-term moving average ribbon above the cumulative tick, this is key for any kind of bullish rally to happen. So you can see right now that is clearly not the state. We're in a bit of a consolidation state. So we want to see those railroad tracks and the cumulative tick start to trend higher again. Another reason that we were cautious today is looking at, this is SPXA, so this is the AM settled. SPX, still a largely put dominated environment. So until we start to see these calls really come in, especially out of the money, the market remains skeptical, and we remain skeptical of the market as well. Again, looking at the SPX PM settled contracts only complex, which again is much more kind of short-term focus, as this is the 0DT and the weekly expirations. We have been seeing an improvement below spot price in terms of calls starting to come through, but above spot price, still don't have anything there yet. And also just looking at the width of the DEX transition zone, this is quite large, which is indicative of markets are still in transition. And then again, today we were not able to even reclaim the bottom of that transition zone, which was at 5,680. So, in the coming days, we need to continue to see calls start to come in the complex, especially after today's session is going to be interesting because we just got that push down early in the session. See call and put volume was fairly choppy, at least on the 0DT timeframe. So it's going to be interesting to see how the complex shifted, if at all, once we get our overnight updates. Lastly, looking at the GEX ratio down here, you can see that there's a slight impulse higher. And remember, the GEX ratio, that's just a measure of cumulative call gamma relative to cumulative put gamma in the complex. Kind of like the traditional put call ratio, but it's better because we incorporate this based off of gamma. So there's a time component, which is more short-term bias. We can see there's been a little bit of an impulse higher. We want to see this materially ramp and at least get above 1, which indicates that there's more call than put gamma in the complex. We are nowhere near that right now. So looking at the pre-market structure coming into the day, we can see that the structure was actually fairly balanced in the 0DT complex. Net GEX was essentially 0. We can also see our transition zones here. The key GEX-DEX transition zone was at 57.05 to 56.65, and then Drunken Sailor zone was just a little bit larger at 57.10 to 56.60. So these were our goalposts for the day, meaning in between this range, expecting chop action. Below this range, expecting more downside pressure, and then above this range, we were expecting to see more upside pressure. Obviously, we gapped down on the day, so let's go take a look at that now. So here's today's price action. We have our transition zones plotted where they were. We just went over those. And obviously off the open, spot price, gapped down and proceeded to move pretty quickly over the first 30 minutes of the session, cutting straight through prior day lows, bottoming out there right at the 5,600 key psychological level. And then just going through the vol M chart, which again, this is a measurement of intraday SPX 0DT volume. What we're looking at is on the call side, this thick green line is call centroid. A red line is the put centroid. Centroid is just the center of a distribution. So every 5 minutes, we look at volume. We look at where the center of distribution is. We plot that. We connect the dots. And over the session, we can kind of infer what participants are doing on the day. And so just to make that tangible for you, this is an example of what vol M would have looked like at noon. And then as we get more cuts of data, we can see this really just the trend of the day continue sideways. Right, we have the call side. There is no impulse higher. This is simply trending lower. The put side, this is trending higher, no impulse lower as well. This is where we get our choppy price action from. And right, we draw these lines of best fit, which bear with me for a second, but pretend we're at 1 o'clock. Those lines of best fit are going to extend, which we can infer that is where price is going to trend for the rest of the day, assuming all else equal. Because remember, these lines of best fit, they're essentially linear regressions from the centroids themselves. So And those centroids represent sentiment of the market. So if we know what the sentiment of the market has been since 1 o'clock per se, which has just been in this manner, and we can expect all things equal going forward, we can project that that behavior is going to continue the same way. And so today, that is exactly what it did. We got choppy price action. There was no real expansion of the call or the put side in either direction throughout the day. So frankly, this made it easy for us to say, okay, until we see this kind of happen, we should expect more chop. And then another useful tool, especially on today when we were getting that choppy price action, is something that we call NetStat. Effectively, what this is on the 0DT time frame, we are looking at each of the 4 Greeks. And we are looking to see above and below spot price, which moneyness is winning. So below spot price, that can either be in the money calls or out of the money puts. And then above spot price, that can either be in the money puts or out of the money calls. And then understanding what is in control, how those Greeks are decaying or limiting to 0, 1 respectively, and what influence that may have on price. So this was at noon when the market was trying to make a little bit of a move higher. We could see that 56.25 was the clear dominant strike above as it relates to specifically charm and even gamma there. So at a minimum, this key strike needed to be taken out before we got super excited on a continuation move higher, which again, you can see I drew that out right there at 56.25. But again, we were not able to break that level. Think about it as a zone. We were not able to hold that zone and break higher. And again, we just got chopped the rest of the day. And going back to the volume chart, I know I'm beating a dead horse on this thing, but this thing is invaluable. Just to show you the use case, this was the snapshot at 1:30. Look, we could see, again, as I was talking about what those centroids have been doing up until that point, we can infer what they're going to do the rest of the day. And again, this was just predicting more choppy price action. The midpoint was, right around 5,600. Obviously, we settled a little bit above that, but nonetheless, this could have kept you out of trouble as, you could have told yourself, okay, so far we are expecting choppy price action, not able to get above the key 56.25 level. So there's not a ton for me to do there, except maybe doing a delta neutral type strategy, looking for a pin, something like that. But buying a upside call, I think we're going to ramp to 5,700 or something like that. Just was not logical today, given what the tools were telling us. So where do we go from here? On a short-term basis, again, this is just a pullback in the context of a really 2-day momentum burst higher. So really, the bulls need to continue to prove themselves, which, as Brian Shane likes to say, guilty till proven innocent. And then in terms of market structure itself, we need to see those calls really start to come back in. Again, the GEX ratio, we need to see that ramping higher. And then we also need to see on the full complex, I know we've been only talking about the transition zones on the 0DT, but on the full complex, we need to start getting above the top of the transition zone, which right now we have not been anywhere close to doing. So until we start to get that, then it's really hard to get even more bullish here. And especially if we're on the downside of those levels, and there's really no reason to be bullish. So with that, hopefully this recap's been helpful. Hopefully you can see the utility of the market trend model, of our volume analysis, and then of the NetStat today, which is something new that we introduced this week to the videos, although NetStat's been a command we've had for years now. So have a great night. We'll see y'all tomorrow. Bye.